Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X. I am very glad to have my friend Rick Rule back in my show after two very successful sessions we had in the last 2 months that have combined more than 100,000 views. You can check them in the links below. That said, Rick, thank you for joining me again. How are you, sir?
I'm great, Lucian. The better, frankly, for being on your program. Thank you.
Thank you. We have little over a month before we see each other on Florida on your Rule Symposium. I really look forward to be there, and I talked with a lot of my followers, and big number of them are coming too. So, Rick, how are the preparations going? How does the guest list look like now? How many speakers, companies, attendees? Tell us more.
Lucian, we try to make the conference a little better every year. And if you do that for 28 straight years, at the end, you have a pretty good conference. I'm highly confident that this will be the best conference ever. We start by having a wonderful group of core attendees, a group of people who have been with us, many of them 20 years and counting. Lucian, the idea that all of the knowledge in the room is at the dais and emanates out to a large crowd of people trying to create or preserve wealth is stupid. So we have a wonderful franchise of very, very, very knowledgeable attendees. That's actually where it starts. If you come, you will be in a room of very smart, very nice, like-minded people. Why are they there? Well, we do a good job with global macro. We do a good job presenting big picture thinkers, the Grant Williams, the Daniela DiMartino Booths, the Nomi Prinzes, the Jim Rickards, people who can comment about government, about central banks, about Wall Street, because they were there from the belly of the beast. And what's important is that we give you a big picture view that you wouldn't get from network news, from popular media. You wouldn't get it from the Wall Street Journal. You wouldn't get it from ABC, NBC, BBC. Once we've accomplished that, we try to tell you how to implement strategies that are necessary to optimize or defend yourself from the circumstance described by these big picture thinkers. And when I say experts, I'm talking about analysts and portfolio managers who have very long, 20, 30, 40 years track records of success in natural resources. Not some failed analyst from an investment bank who couldn't make it in technology and couldn't make it in consumer durables, but rather people who have been on the front lines in natural resources for 20 or 30 years. Beyond that, which is really, really, really useful, we have the living legends. We have people who have built multi-billion-dollar natural resource companies from scratch, the Robert Friedlands of the world. And what's useful about these guys is that they tell you how they built the companies, what mistakes they made, and how the process made them better investors. These are people who have taken companies from market caps of $5 million to $5 billion, telling you how to identify the early stage opportunities that can give you 10 times or 20 times or 100 times your money. And probably more importantly, how to avoid the most obvious mistakes. Then, of course, at our conference, unlike any other conference I know, our exhibitors are vetted. Our attendees have told us that our exhibitors are content too, not advertisers. So in order to be a public company exhibitor at the Natural Resources Investment Symposium, you have to be owned in accounts owned and managed by us. Sadly, Lucian, there's no guarantee that because I own a stock, it goes up. But there is a guarantee that the process is honest. At every other investment conference I know of, the qualification to be an exhibitor is a check that cashes. Our qualifications are much more severe. Because of all of that, if you attend the Natural Resources Investment Symposium, either in person, which I would prefer, or via live stream. I know that a lot of your audience is European, and it's just inconvenient for them to come across the Atlantic. But via live stream, you can watch the conference from the comfort and convenience of your own home. In either case, you will have access to the recordings. We're going to give you like 60 hours of intense programming over 4 days. You can't absorb it all. You can't do it. And having the ability to revisit the stuff that you didn't understand or have time to pay attention to is critical.
Yeah.
All of that allows me to say to you and your listeners, if any of you, for any reason, having attended live or via live stream, don't believe you got your money's worth, email me, you get your money back. Absolute gold-plated money back guarantee. The financial risk is all mine.
Sounds good, Rick. As I am a media partner of the conference, I will leave the affiliate link in the description of the video where you can register. If you are coming, text me, let me know. I will be there. My pleasure will be to shake your hand. So, Rick, let's start with our interviews. My questions. In our two prior interviews, we covered the equities and we covered a lot of them. This time, I would really like if we can cover commodities. I have a list of commodities here and would appreciate that you give us your overviews, pros, cons of those commodities. And I mean that in the short term to mid-term time horizon. I want to start with coal. What's your take on? Yeah, sorry.
Could you define short to mid-term? My definition of short to mid-term may be different than your viewers.
Okay, let's say 6 to 12 months.
Got it.
Yeah, let's start with coal. What's your take on coal as a commodity and investment?
Thermal coal, I think, will be flat in the 6 to 12 month time frame. Metallurgical coal may be a little soft. Having said that, I'm not selling my coal stocks because at these prices, the coal companies make so much money.
Yeah,
I'm willing to relax. What I like about coal is the fact that it's really broadly hated. It and North American natural gas probably enjoy, if that's the right phrase, the lowest price cash flow multiples in the commodity space. And while in particular the European Union is decidedly anti-coal, the rest of the world, including Germany, is burning it like mad.
yeah.
The highest record year for coal consumption was 2023, and we're going to eclipse it in 2024. So despite the rhetoric that you hear, the coal industry will be with us for a very long time. But in top line answer to your question, the short term, the 6 to 12 month time frame, I expect coal prices to be flat to down.
Fair enough. I have the same question for oil. What's your take on oil?
In the 6 to 12 month time frame, I don't see dramatically higher oil prices unless you see an escalation of hostilities between Iran and Saudi Arabia.
Okay.
Remember that about 50% of the world's export crude moves through the Straits of Hormuz. About 50 clicks across. And if anything happened, if anybody chucked a missile at somebody else's boat through there, you'd see an immediate and impressive move to the upside in the oil price. I'm not a geopolitical analyst, so I can't say if that's going to happen or it's not going to happen. Right now, with production still ramping up in West Texas and ramping up very rapidly in Guyana, I see the world market as adequately supplied for oil. Increasingly, too, we're beginning to see substitution of liquefied natural gas from Qatar and other places. So I see the oil market stabilized. Again, I think the oil stocks at current oil prices are cheap. And if you let me extrapolate out a little further,
Sure.
3 years, 4 years,
Sure.
what we're seeing in the oil industry is a massive underinvestment in sustaining capital expenditures, about $1 billion a day by last reckoning. What this does is it impairs the ability of these companies to produce 3 years from now, 4 years from now, 5 years from now. So the stage is being set, largely politically, for a decline in oil prices, a decline in oil supplies, which, absent a global recession or depression, should lead to higher prices. It's important to note, too, that the surge in production has mostly been American. And that was partially a function of low interest rates. As capital costs for oil producers go up, the economics of the capital-intensive shale drilling that's taken place go down. It is arguable, too, that in the Permian Basin, the industry has used up most of its inventory of tier one locations. That itself is partially offset because of the rapid advances in technology.
Yeah.
In other words, what was a tier two location can become a tier one location if a variety of technological adaptations are made. So it's really an interesting market. The only thing I can say is that there's lots of potential for surprises with regards to politics. Without those surprises, production gradually curtails simply as a function of a lack of new investment.
Yeah, I like your views on that, and I agree with them 100%. The next on the list would be natural gas, Rick.
North American natural gas is cheap. It's in stupid oversupply as a consequence of the aforementioned shale drilling, byproduct natural gas production, both in the Western Canadian Sedimentary Basin, but particularly in the Texas basins, are such that supply of gas has overwhelmed storage facilities and markets, so that the natural gas price in some counties of Texas in some periods of time goes negative. This won't last. There's too much utility around natural gas, and the industry is spending literally billions of dollars addressing this. German companies, as an example, that relied on cheap Russian natural gas are relocating from Germany to the Texas Gulf Coast. Fertilizer producers, petrochemical producers, things like that. Infrastructure and storage facilities are being built. Liquefied natural gas facilities are being built. In the 3 to 5 year time frame, maybe the best arbitrage I see is in North American natural gas, both Canadian and American. There are political impediments to Canadian natural gas, namely the hostility of the Prime Minister of Canada to his own country's natural gas industry. He seems to be the only one who doesn't see a business case for exporting Canadian natural gas.
Yeah.
The Germans see it, they want it. The French see it, they want it. The Chinese see it, the Japanese see it, the Koreans see it. Everybody sees it except for the Prime Minister of Canada.
You got that right. The next one, I know that you are bullish for the long run, but for the 6 or 12 months, I want to hear your opinion. Copper.
I don't think that the copper price needs to go up, but I think it might go up. That's really a function of the global economy. No matter what you do, Lucian, in the near term, you can't increase copper production because it takes a long time and a lot of money to increase copper production. If we have a soft economy, which the market seems to be telling us, you can have supply constraints if you have demand constraints.
Yeah.
And the price doesn't go up. We have underinvested in copper for 30 years.
Yeah.
And in addition, the cost while the price of copper has gone up, the price to produce copper has gone up too. It's energy intensive. Energy prices since COVID have doubled. It's capital intensive, and interest rates over the last 3 years have doubled. But the thing that's really gone up have been taxes, non-tax compensation to government, and royalties. Those costs in places like Chile, important copper producers, have been increasing at about 25% compounded. So while the price that copper producers get paid for copper has gone up, the cost of producing copper and developing copper mines has gone up an awful lot too.
Yeah. Next on the list, uranium. What's in the cards for uranium over 6 or 12 months? Will we see more than $100 spots? What's your take?
I think we might. I think it'll flirt around the $100 level. I would urge your listeners to understand that the spot market price is increasingly one that commands psychological attention, but isn't a reflection of the market.
Yeah.
The Sprott Physical Uranium Trust frequently trades more dollar volume per day than the spot market of uranium, which is to say the spot market has become the Sprott market. And increasingly, the transactions between buyers and sellers of uranium are taking place in the term market rather than the spot market. This is a really important development because in uranium, unlike any other commodity that I follow, producers and consumers can lock in prices and volumes for 5 years, 10 years, 15 years, and 20 years. That means that a relatively small uranium company that makes a discovery if they can sign a fixed price contract to build the mine, and can also contract out the product, can build a mine. This isn't true in any other commodity that I'm aware of. If you take a 15-year purchase contract by an investment quality purchaser, say a Tokyo Electric Power, or a Duke Power or something like that, you can literally take that to the bank. What this means is, while the market believes that some of the best development projects out there will have to be sold, the vendor can say, we don't have to sell, we can build it. It may be that their ultimate goal is to sell it, but by saying that we can build it, there's some creative tension between buyers and sellers, because the companies do have the ability to finance uranium mines where that ability doesn't exist in other commodities. Sorry for that long-winded answer, but it was a nuanced question.
No, it's a great answer. Just one other thing with uranium. What's your take on Niger situation? How will that unfold eventually?
My suspicion is that the junta in place in Niger is simply looking for a more multipolar relationship with the world. Niger was dominated by the French.
Mhm.
I'm not trying to say that there weren't benefits to Niger around that, but the junta in place in Niger is dependent on the Russians for their own internal security. Russian forces have replaced French forces. The government of Niger has been very careful to reassure foreign investors that their rights in Niger will be protected if their activities in the country are consistent with the efforts of the country of Niger. Now, this is very much a country and a society in transition. So what is true today may not be true 2 years from now.
Yeah.
There are lots of internal challenges for that government. ISIS offshoots, tribal and clan difficulties, the probability of sub rosa interference in their affairs by the French.
Yeah.
The French aren't going to pack up completely gracefully.
Yeah,
So there's lots of things to consider. I suspect the probabilities are that the market in Niger has been oversold. But given the uncertainty, people should, if people are going to speculate based on that, they need to speculate with money that they can afford to lose all of.
Yeah, it's a speculation. I agree. The next on the list would be platinum.
I love the platinum business. Price has fallen by half for two fairly obvious reasons. The market seems to believe that the internal combustion engine goes the way of the dodo in 2032 or something like that. Relevant to platinum and palladium because their primary use is an auto catalyst. They reduce smog emissions from internal combustion engines. I believe the internal combustion engine will be with us till 2065 or 2070. And unless there's overwhelming demand around the world among young people for more smog, and I don't see people demonstrating, asking for more smog.
Yeah.
Then there's demand for platinum group metals. On the supply side, it's fairly obvious that the Russians need money. The last time they needed money was 1990. They sold everything in the cupboard. And one of the things they have an abundance of because of Norilsk is platinum and palladium. And they've been clearing the shelves. It seems that they have a use of cash right now. What I really like about platinum and palladium as a speculator is it's really produced in size in only 3 places. South Africa, a basket case and getting worse. Zimbabwe, which aspires to be a basket case. It's a sub-basket case. And Russia, which is not the paragon of stability. If anything were to happen socially and politically in any of those 3 countries, but particularly Russia and South Africa, supplies of platinum could be seriously disrupted. And what I really like about that is that demand for platinum is fairly price inelastic. It takes at current prices about $100 worth of platinum to equip a new car with a catalytic converter that enables the sale of that car. If the price of platinum were to double, the input cost would go from $100 to $200, and that would enable the sale of a 50,000 euro car. It's irrelevant to the finished price of the product.
Yeah.
So for speculators, not for investors, for speculators, platinum is a wonderful place to be. I do it two ways. I own the Sprott Physical Platinum and Palladium Trust for obvious reasons. I'm a big Sprott shareholder and I helped design the product. And I own the shares of a couple of development stage platinum and palladium deposits, which are outside of South Africa, Zimbabwe, and Russia. My theory being, if something goes wrong in one of those countries, the investors will search the world in a mad hunt for supplies that are secure from whatever internal disruption exists at the time.
Okay, Rick, next on my list is vanadium. I don't know if you know a lot about vanadium. What's your take on vanadium?
I know a lot about vanadium, and thus far I've been dead wrong, by the way. I was attracted to vanadium 3 years ago and was greeted for my genius by a 30% decline in the price of the stuff. Vanadium is very useful in specialty metals, in high strength, high temperature tolerance alloys, and of course is an important component in various utility scale battery technologies. The jury is still out with regards to batteries, which batteries are going to win the technology race, particularly at utility scale. If it happens, I think vanadium will be a major beneficiary. I don't think you're going to see a major increase in the vanadium price like you did as an example in the lithium price, simply because the northeastern part of the nation of South Africa is a vast vanadium sink. I mean, we know where there's lots of it. And if the price was high enough, we could produce it. But certainly companies that are generating free cash at today's vanadium price, I think will look very cheap 5 years from now. Remember, the South African production will take a decade at least to put in production. Given the political realities of South Africa, it might take them a year. It might take them 10 years to decide who gets the bribes. So.
Okay. What about rare earths?
I like the rare earths business. First of all, it's important to note that rare earths aren't rare.
Yeah.
We haven't looked for them because the Chinese produce them so cheaply.
Yeah, but it depends which ones, right?
Correct.
It's a group
Correct.
of elements.
Correct. I think two things are changing there. One, there are geopolitical concerns about the potential for the Chinese weaponizing their rare earth supply, not making rare earths available to fabricators around the world, in particular U.S. military fabricators. The second, less well understood, is that the very low costs associated with Chinese production have come at the cost of extraordinary environmental degradation in China. The Chinese people and the Chinese government are less willing to accept that degradation, which means that the costs of producing Chinese rare earths are going up, and hence the sales price are going up. Investing in development stage, high quality rare earths projects outside of China that could potentially be in the lowest quarter of the cost curve worldwide is a real focus of mine right now. I'm working very, very, very hard at it, and I'm spending a reasonable amount of money with geological and process technologists trying to determine which those projects are and how I can finance them. This
Even
is
Europeans. Sorry.
Pardon?
Even Europeans.
I will happily look at European projects if they inhabit the lowest quartile of the cost curve, and if they exhibit at least 25% return on capital employed at today's prices. Speculators who want to inhabit this space need to know that the timeframes are extremely long. If you are investing in development stage rare earths projects and you don't have a minimum of a 5-year time frame, go find something else to do. If you invest based on narrative, a gold bug, a silver bug, something like that, don't invest in rare earths. If you are lucky enough to do the work and get yourself involved in a large scale project, which the EU and China and Japan and the US all considered to be strategic, where you're in the lowest cost quartile in the world and generate at least a 25% return on capital employed. At today's rare earth prices, buy it, hold on, and prosper.
Okay. Next one is tin. That is the commodity I never invested any money, but people are telling me invest money in tin. So what's your take on tin?
I like the tin business. It's very important in terms of industrial applications. Anything basically that's welded or soldered around the world requires tin. And there's all kinds of stuff that's welded and soldered. The world's traditional tin fields, be they the Platino fields in Bolivia, or the placer tin deposits in China, Malaysia, and Myanmar, are at once less prolific than they were, and also exhibit environmental degradation challenges that are less acceptable. So increasingly, the world is going to hard rock tin. We haven't spent a long time looking for tin because the tin price has been so cheap.
Yeah.
But certainly looking for tin in historic tin districts, in particular in Brazil, in very northern Myanmar, politically challenged place, in Bolivia, makes sense. What works in the tin business right now is Eastern Congo. Alphamin, where disclosure of conflict, I am and have been a very large shareholder, is easily the largest and lowest cost producer on the planet. There are challenges there. You have to take truckloads of tin concentrate through rebel-held territories on roads that are effectively tracks. Each truck has tin concentrates worth $350,000 or $400,000 in a place where people kill each other for $50.
Yeah.
So there are some challenges. Thus far, Alphamin has done a spectacular job. Probably best not to ask how, getting their cargoes through these areas and getting them sold. But that doesn't always need to be the case. I'm a large Alphamin shareholder. I look at the fact that over the next 3 years, their production should double. They are far and away the lowest cost producer on the planet. It's a wonderful speculation, but it's a speculation.
Yeah. The next on the list is zinc.
I'm inclined to the zinc business. If you, I mean, it's been a capital trap for years. It gives you 2 good years, and then it punishes you for 5 years.
Yeah.
Zinc, too, is often a byproduct of copper production in these big porphyries, like moly is. When zinc treats you well, it treats you extremely well, but it's really a commodity where you want, I mean, normally when you buy zinc in a corporate form, you buy it in the context of either a volcanogenic massive sulfide producer, or in the context of a copper producer. It's very difficult and very dangerous, frankly, to mess around with a pure zinc plays. That notwithstanding, if they come along and they're fairly high quality and good size, I'm attracted to them.
Okay. Gold. We didn't touch on gold. What's your take on gold for 6 months or 12 months?
I don't have one. I really don't. I have a 5-year time frame on gold. I believe around the world, quantitative easing, debt and deficits, the weaponization of the world's reserve currency, which is to say the US dollar, and the incredible market share, small market share of gold relative to other financial assets, means that the gold price won't merely be higher, but it'll be materially higher in 5 years. I'm not given to clickbait type headlines, but recently I've been quoted as saying, I don't care much about a move from $2,300 to $2,500, or even taking out the old real highs, not nominal highs, but real highs around 2,700 US. I own gold because I think it's at least not unlikely that it's $7,000 or $8,000 or $9,000. Gold, from my point of view, maybe this is an American point of view, but I believe that gold trades conversely to faith in the US 10-year Treasury. And I think the US 10-year Treasury is a lousy instrument. So for that reason, I'm afraid, not hopeful, I'm afraid that gold trades not merely higher, but much higher. Whether it does it in 6 or 12 months, I have no idea. I'm not a trader.
Yeah, I will not put in my headline $8,000 gold mentioned by Rick, so don't worry.
Thank you.
What about silver?
Silver traditionally has had its future determined by gold, which is to say the precious metals narrative, in my experience, has always been established by gold. And when silver catches up later in the cycle, then silver moves further and faster than gold. I had anticipated, I think in an interview with you, that silver would take a year or a year and a half to break out. I may have been a year wrong. We had a nice little move in silver not too long ago. Again,
Yeah.
the move from $25 to $30 is of no interest or consequence to me. I'm not a trader. The moves in the little silver stocks that I owned were, and still own, were more consequential. And that follows history. I am not convinced that the move that we just saw in silver was a false breakout. Again, I don't own it because of the move from 20 to 25. I own it because it normally magnifies the gold moves. If gold moves from 2,400 to 7,000, again, I'm not saying it will, but if gold goes up threefold or fourfold, I would expect silver to do better than that.
Of course.
Maybe it should, maybe it shouldn't, but that doesn't matter. When I look back at history, that's what happens. And the two most volatile asset classes that I know of in natural resources are junior uranium stocks and junior silver stocks.
Yeah.
The market capitalization of the legitimate junior silver stocks, the combined market capitalization is so small. I've seen this happen 4 times in my life, Lucian, that when the generalist investor money comes into the precious metal space, there isn't enough market cap in the silver silo, the silver junior silo, to contain the money. Let me illustrate. This is important. When I came in the business in the 70s, one little petty dreadful silver company, Coeur d'Alene, went from 10 cents to $65.
Wow.
The moves in Hecla and Callahan were not as dramatic. They were only up 30 or 40 fold. The next mini market in silver in the early part of the decade of the 90s, I did participate in. We underwrote Silver Standard at 72 cents with a full warrant. That stock went to in excess of $40 in 6 or 7 years. We underwrote Pan American Silver at 50 cents. Ross was too cheap to give me a warrant. But that price went from 50 cents to, if my memory serves me right, $45 in 6 or 7 years. The upside in a carefully chosen portfolio of silver juniors, if you catch the silver market correctly, is mind-boggling. And at 71 years of age, I'd like to do that one more time in my life.
Definitely. And there was one uranium stock in 2007. It went from 10 cents, then it went to 1 cent, then again to 10 cents, and then it skyrocketed. I believe the ticker is PDN. You probably know what I'm talking about.
Paladin was the oddest financial event of my career. I had the good fortune to write a save the company check at 10 cents.
Yeah.
I was rewarded for my genius by seeing it go from 10 cents to a penny.
Yeah.
If you're down 90%, you don't have a hold. You have a buy or you have a sell. Mercifully, I determined that I had a buy. I wasn't quick enough to get any at a penny, but I did get a fair bit at a penny and a half. And I saw the stock go from a penny and a half then to $10. Truly a wild ride.
Yeah.
Americans of my generation are fond of a sport called rodeo. And this was a rodeo ride to beat all rodeo rides.
Yeah, yeah. I have 2 more, Rick. Next one is lithium.
I love the lithium
6 to
narrative.
12 months.
6 to 12 months lower. The world's awash in lithium. We were never short of lithium. We were short of lithium refining capacity. The lithium price itself went up fivefold, sixfold maybe. The consequence of that is that two things happened. We went looking for lithium, and never having looked for it before, we found a lot, not a little. And over the 5 years, we built a lot of lithium refining capacity. So now you have at least adequate capacity, and you have a whole bunch of projects, some of them very good, competing for space. And on top of that, you have these little tiny dumb outfits like Berkshire Hathaway, like Occidental Petroleum, like Exxon, developing direct lithium extraction technologies where they take the lithium out of saltwater brines. Many of your listeners won't know that the oil and gas industry and the geothermal industry regards lithium as waste.
Yeah.
They pay to get rid of it.
Yeah.
I think that in 2026 or 2027, that lithium will be in the same place that uranium was at in 2022. It'll be priced below the cost of production, and speculators will hate it. There is no hate as sincere as the hate of a jilted lover. And lithium probably had 300,000 or 400,000 narrative-oriented lovers who are down an average of 75 or 80% on their lithium stocks. If they, as I suspect, lose half from here, by 2026 or 2027, lithium will be regarded as a four-letter word. And then I'll be all over it, just like I was uranium in 2022.
Similar approach for me.
Yep.
Exactly. Final one, and very interesting to me, diamonds. I owned a couple of times Lucara diamond. I was in and out, and I believe that stock is now underperforming again. So what's your take on diamonds and on Lucara mining? And for me, it is a great company, always has been, but it's underperforming.
The CEO of Lucara, William Lamb, is somebody whose career I've followed for 20 or 25 years. He's just a superstar. He's really a true superstar. And the company is backed by the Lundin family, with whom I've done business since 1974. A very, very, very long time. That being said, I'm not really a diamond speculator. To the extent that I saw an early stage diamond exploration project that was deeply out of favor, where I thought there was a probability of the discovery of a tier 1 deposit, I would probably play. One of the constituent companies that went into Lucara was a diamond exploration company that I was a seed stage shareholder in. But I have no idea myself how to construct supply and demand curves for diamonds. I think that the market, I think that to understand the diamond market, you need to have experience in consumer goods. And Lucian, I don't even know how to dress myself. So I'm the wrong person to understand luxury consumer markets. So I don't play the diamond game.
Okay, fair enough. I want to hear your opinion also on real estate. Do you believe that buying real estate is a smart thing today?
Not as smart as it was in the 1980s. Not as smart as it was in a period of declining interest rates. The real estate business is always a great business if you can add value. And the real estate business is usually a good business for people who have courage in liquidity squeezes. What I like about the real estate business, the way it served me well in the decade of the 80s and the middle part of the decade of the 90s, is, at least in US capital markets, if you can buy a duplex or a triplex or a fourplex, or if you can buy a multi-unit with 30-year fixed financing, where your cost of capital stays the same, but you can raise rents 3 or 4% compounded every year for 30 years. Yeah. The delta between your return on capital employed and your cost of capital continues to increase at the same time that the cost of other people competing with you goes up. construction fees go up, construction costs go up, land costs go up, labor costs goes up. So if you have a very long-term perspective, and if you buy real estate with fixed mortgages, you will do well over time, particularly if you have the courage to do it, every 10 years when there's a panic. Now, it took real guts to buy real estate in the real estate crash of 2009. Those people who were veteran real estate players made major amounts of money getting concessionary financing from the banks who were upside down with real estate loans. There are lots of people that I know that are really good at real estate. They add value. For them, it's a business. They buy a triplex in a decent neighborhood that's been ignored for a long period of time. They fix up the property. They boot out bad tenants. They service their existing tenants better. It's just like operating a restaurant better or something else better. I sold most of my passive real estate portfolio 3 years ago because I saw interest rates rising. And I knew that was a real headwind. And I knew that I wasn't a real estate operator. I knew that I was competing against people who were better than me with the headwind taken out of that which was in my favor. But people who are good at real estate, literally, legitimately good at real estate, will always do well.
Yeah. Rick, final question. How do you see U.S. monetary system, let's say in 10 years? Will we see some form of returning gold standard? What's your take in 10 years?
You won't see a gold standard in any politicized society in my lifetime. The gold standard imposes a discipline on politicians. It reduces their power.
Yeah.
Politicians live for power. They will never voluntarily relinquish power. You will have politicians that are reasonably competent liars. So as an example, in Zimbabwe, they talk about a gold-backed currency. Where will they get the gold? It's a gold-denominated currency.
Yes.
Now, will there be an informal gold standard? In other words, will more and more transactions take place privately? Will countries trade between themselves in gold rather than in their own counterfeited paper? Absolutely.
Yeah.
But will there ever be a legislated gold standard? Never mind in my lifetime. In your lifetime? Nah, won't happen.
Yeah, you're probably right. Okay, that was Rick Roll. Rick, thank you for coming to my show once again, and see you in Boca. Thank you.
One more thing, if I might.
Yes, sure.
Any of your listeners who won't be able to join me in Boca can still interact with me. Go to ruleinvestmentmedia.com. List your natural resource stocks. No obligation, no charge. I will personally rank them 1 to 10, 1 being best, 10 being worst. Remember, too, even if you can't come to Boca, you can enjoy that conference via live stream in the comfort and convenience of your own home. Over 1,000 other investors will do precisely this. And if for any reason you don't think you got your money's worth, email me. You'll get your money back.
You forgot one thing, Rick, and that is when you are evaluating a portfolio, do not send, people should not send you pot stocks, cryptos, right?
Please, no tech stocks, no crypto, no pot stocks, no stuff I don't understand, which is most of life. Just send me natural resource stocks.
Thanks, Rick.